Okay. Okay, good morning, everyone. We are here live on YouTube today. So kindly share the link, share the YouTube link, and let everyone else join us live this morning. Okay. We hope to find some trades this morning. Okay, so basically, we hope to find some nice setups this morning. I mean, as usual, I would say, what I am going to be doing today is basically how I trade. If I do find a good setup, obviously I'll be jumping in. But it's for you to know that yes, you could take the trades with me. However, know that that's entirely up to you. So even though I might sometimes, mistakenly say we are taking these trades together, really, it's me taking my own trades. If you trust me enough, especially if you've been with me for some time, then fine, you could jump in and take the trades. But I'll be telling you, where I'll be looking to get into the trade and where I'll be, the price I'll be having as the stop loss and take profit points and all that. I'm also going to be, as it were, showing you some, some of my trading style. I do trade harmonic patterns a lot. I also trade using head and shoulder, and of course, other price action strategies that do apply. I also am sure if you follow me for even 2 hours, you know that I also love using indicators. So let's hop on in. I'm not going to be spending too much time at the start of this session. I'm not going to be spending too much time, necessarily talking or explaining things, because I'm going to be focused on finding some good setups or trades. It's a short week this week because, there was the bank holiday in the States yesterday and there was low volume in the market. It basically means a short week. That's what it is. We only now have Tuesday, Wednesday, Thursday, Friday, if you do trade on Friday, to trade. So I do want to find some trades. So let's get down with it. I am going to have some music in the background. Like I say, feel free to share the YouTube link, with everyone. I am Francis. I'm reaching you today from the UK. So let us know where you are calling in from, where you are joining in from. Right, Theo. And be quick. Yes, I can see someone here has hit the like button. God bless you. Now, do click on the like button as well. It does help the YouTube algorithm, share this with other people so that others know that we are online. So give me a couple of minutes and we'll be looking at the charts. Right, yo. Okay, so this is the Euro USD chart. Let's have some music in the background. Okay, now let me start with this. Let me share with you some of the harmonic patterns we have. We are looking at. Okay. Now this is you know, the chart for Euro USD. You know, we marked this up and sent it out last week. You know, so that was the entry. You know, the entry was going by this. The entry was 1.1848. Sorry, what I mean, you can see that here. That's basically 1.18475. That was the entry. You know, so it looks good to go. You know, I'll be looking to re-enter this myself, you know, shortly. So you can see what happened initially. You know, it basically, the price, you know, took off from the price reversal zone, moved as high as that. Let's just see. So it gave about as much as 127 pips before, and you can see that before it actually came back down, and it's pushing back up now. It did go back into, you know, the zone where you've been looking to come out, but it's pushed back up, and I do see it going back up as well. You know, so we might be jumping in soon. We just want to have a look at some pairs first. You know, so that's that one. We also have the okay, there's nothing there. Oh, well, there is. So we also have the pound JPY. We have the pound JPY as well. We have the pound JPY. You know, that was meant to be the entry. Now, guys, if you're trading with me before, you know that this is where we would usually jump in. The D, you know, we have, let's do this. We have X, A, B, C, D. Now, the D is the price reversal zone, whether it's a bullish pattern like this or a bearish one. The D, in this case, because it's bullish, the D is at the bottom. And, you know, if it was bearish, the D will be at the top. So we see what's happening now. If you got in somewhere around here, then you should be in some good profits. Let's see. You should be in at least 148 pips by now. But even if you didn't get in at the price reversal zone, let's say you got in somewhere here. I mean, after all, this was, you know, well, there were two bullish engulfing patterns here. I feel like teaching this morning, but we'll hold back a bit. Maybe towards the end, I'll do some teaching. I just want to find some trades because of the short week. But anyway, the bullish engulfing setup here would have been the right place to get in. There was another bullish engulfing. So if anything, you should have gotten at least, who knows, 80 pips. Even if it was 50 pips you got from this, that would have been good. So I would always say, guys, you might be watching us from YouTube now, or wherever else you're watching us from. Note that I post these harmonic patterns and other trades in my Telegram group. I'll be leaving the link. As a matter of fact, let me leave the link there. I'll be leaving the link on the stream this morning, so that you can actually join. It's free to join. And of course, we have the VIP channel, but that is for subscribers. Anyhow, there's a free channel where we post a lot of this, and you could actually get some signals, some free signals from there. Now let's see what else we can find here. Let's see what else we can find. Okay, so this is the pound USD. Obviously, this one has played out. Okay, like I was saying a while ago, this one is a bearish pattern, quite unlike this one, which is a bullish pattern. We see this one is bullish, so the D will be at the bottom. You jump in at the D, targeting the different, alphabets here or points here, targeting B, C, and A. But the pound USD, on the other hand, has the D at the top, the price reversal zone. So you are trading it down. And you can see super duper, it came exactly where we said it would. It came as far as the C. Well, obviously it hit B first, C and D, and it has now gone back up. I will be finding, I wanted to post some harmonic patterns yesterday, but I held back because, when the market is slow, and all of a sudden there's more volume in the market, because of the bank holiday and all that, the weekend and all, what could happen is, the setup could change. So I want it to be that the setup is settled before I actually mark it out or draw it out and post. So I'll be doing that today. So you do want to join our Telegram channel, not to miss out on these trades. Now, guess what, guys? Guess what? Beautiful setup. I mean, I've just told you, giving you an idea now of some of the ways in which you jump into our harmonic patterns or trades generally. You could look for bullish and engulfing candles. Now, even if you didn't catch this price reversal zone, you could have perhaps caught it from here and still gotten at least, well, over 100 pips. Now, guess what, guys? 100 pips every other week is good. 100 pips every other week, because if you are taking, say for instance, I post 3 or 4 harmonic patterns, well, I do tend to post 1 or 2, guys, really, to be frank with you. I do tend to post 1 or 2 for the free on the free channel. I post a lot more, signals for the VIPs. Why? Because membership has its privileges. I'm sure you know that. I am being straight up with you. But even if you were to catch some peeps from the free signals or from the free post and all that, I suppose that is still a good thing. But anyhow, do join us. You know what? Let me post the link while I talk now. Just 1 minute. Let me post the link. Bear with me. Let me post the link. And if you've just joined us on the stream, welcome, welcome, welcome. Let's go. Sorry about that. Now, the thing is, if you don't know much about Telegram, not to worry. It's similar to WhatsApp. I'm sure everybody knows about WhatsApp. It's similar to WhatsApp, except that, some people might think, it's better for business, or at least for their online business, for trading and all that. So that's the link for our Telegram channel. So yes, feel free to download Telegram. You can download it on your phone. You can download it on your desktop as well. So yes, good morning, Ejiri. Welcome from Nigeria. So let us know, guys, where you are all chiming in from today. Okay. Okay, so this is pound USD. Let's see if there's any other one I was looking at. Okay, well, this one has played out as well. Now, what I need to do really, all these ones that have played out, I need to delete them. Okay, well, this one hasn't quite played out. I mean, that's the D. That's the final target. So we can see it's been doing a zigzag. Now, guess what, guys? I usually prefer harmonic patterns on the 4-hour time frame, which means you have ample time to get in and you could be in the trade for quite a while. Now, if you're going to be trading the harmonic patterns, there are times when, you might not be able to get in because of some big moves on the candles. But most of the time, as you can see here, you can, because you can see it came down and then went back up, pulled back before coming back down. I will be looking for an opportunity to get in. We're going to be doing some more analysis on this, soon to see when you can get in. We're going to be doing more analysis on that soon. And I must say, guys, for those of you who are here, anyway, I'll do some more teaching later on. Let's just go through some setups. So this harmonic pattern has been playing out for weeks. So if you love swing trading, definitely harmonic patterns, are good for that. I mean, we entered this weeks ago. I have since come out. I've been looking to get in again. You can see it went all the way, gave a lot of pips, gave as much as 100 pips and all that. But obviously, this is Euro CHF, so you wouldn't expect it to move quite like the pound pairs. But nevertheless, it does deliver well. So you can see I'm just showing you a lot of previous harmonic patterns. This is Euro New Zealand dollar. That was the entry area. It did come here, it pulled back, and boom, it hits the final TP and it's pushing lower. So we can see there are some which are still ripe for the taking, and others, on the other hand, have played out. So all these ones that have played out, I'll be deleting them. As a matter of fact, let me delete this one. Let me delete it before your very eyes. There we go. Okay, we don't expect to see any harmonic pattern on gold unless you are a millionaire. Not everybody can trade gold that way. I definitely would not put your account at risk. Okay, guys, so let's go back to our MT4, which is our platform for taking trades. Let's go back to MT4. Right here. So we're going to find some trades now. We're going to find some setups. That was Euro USD. This is Euro USD. I did say that we're going to be looking to jump in again. Okay, let's look for other things as well. Okay, so you can see I marked up this chart as well, and it has since broken out of this area. It gave us another opportunity and it has taken off. I'm not quite sure how I missed this myself, but that does happen in trading. You can see the channel I drew up here. You can see the channel I drew up there. The price broke out. The price, broke out, came back and retested that area and took off again. Okay, so what I'm going to do, I'm just going to go through some pairs now, and then we will decide which one we would, jump in. Well, when I say we, I mean me, really. Take that as a royal we. If you decide to jump in the trade with me, then fine. Let's look at DAX. Oh, I love to trade DAX. Look at that. Whoa. Now, the market is cruel sometimes. And guess what, guys? We looked at this yesterday. We looked at this, with the VIP members yesterday. And, when we were looking at it, the price was below this area, was below the blue rectangle there. It was somewhere here. And then it pushed back up. I did say to the guys, I've been looking to get in the trade, somewhere around here, or if it gets close to the trend line. And you can see it's basically more or less bounced. It broke the trend line and it's reversed. You can see this massive drop. This has happened in the last 1 hour. I'm not quite sure why. There must be some big news somewhere. This is the DAX. There must be some European or German related news that has caused this massive drop. Wow. The opportunity to get in that trade would be most likely if it pulls back for us. If it pulls back for us, then we'll be looking to sell some more. Let me just have a look at the overall context of the market. Okay, I mean, looking at this now, we most likely will be getting a pullback. That's the daily. Yeah, I won't be surprised if we do get a pullback at least halfway, during the course of the day. But then, I mean, the Zoom, we will be off the Zoom. I'll give you updates on the Telegram channel. So join the Telegram channel. I've just posted a link in there. Okay, so let's look at some more setups. The whole idea is not to chase price. Do not chase price, guys. Do not chase price. Now, share the link, share the Zoom, the YouTube link with everyone. Let's do this. I'm going to have some music in the background now. Just bear with me. I'm still here. We're going to so just 1 minute. I'm still here. I'll join you back on the platform soon. Awesome, awesome, awesome. I know even though it's a short week, guys, even though it's a short week, I just have the feeling it's going to be a great week in terms of trading. If you apply your rules, you must have some trading rules. Okay. Right here, right here. Okay, let's go back to the charts. Oh, well, you can see what's happening now, guys. You can see what's happening. I say it was going to be pulling back, and I do believe it's going to be pulling back. Now, the thing is, I will not be looking to jump in this trade unless it breaks this area. It has to break this area for me. If I'm going to sell, it has to break this area. I mean, if it does pull back and I feel, checking other things as well, then of course, I'll be looking to pull the trigger. But let's check other pairs. We want to have a scan of the pairs to see which one is going to be best for us to get into. Right. You know what? Let me check the Forex factory. I'm not quite sure why there seem to be some big moves on euro-related pairs. So let's see. Yes. So let me share this with you. Let's share this with you. Don't be in any haste, guys, to jump into trades. Take your time. I'm sure a lot of traders, perhaps newbie traders, a lot of inexperienced traders would have jumped into the market yesterday only to be stuck, as it were. Why is that? Because there was no volume in the market yesterday. There was more or less no volume whatsoever. Okay, so now this is Forex Factory, forexfactory.com. It's the news channel. We log on to the news website for Forex and the market generally. We can see this is today's, these are the events or the news events and reports for today. And okay, it's coming up to 9 o'clock in the UK now. So the next news, report, would be this one, the construction PMI. Because it's a yellow folder, we don't expect it to necessarily impact the market much. But then we have this one, the ZEW economic sentiment, at 10 a.m. That is expected to have some mild impact. Apart from that, nothing else is likely going to move the market until 3 p.m. UK time, when there is that services PMI, from the States. So ideally, we should be good to go. I mean, I would be okay with getting into, any currency pair trades, even looking at that. So let's continue looking at the chart today. Now, welcome, guys. Welcome. If you're new to this, I know some of you are new to Forex, but if you're new to this, just stay with us. I'm sure you will definitely pick up a thing or two, to go away with. Forex is, it's one way in which you can begin to generate an extra stream of income. So it's beneficial. I would say it will be beneficial for you to hang in here and learn one or two things. I will be doing some teaching today. I just want to find some trades first. So within the next, I don't know, 10, 15, maybe 20 minutes, I'm going to be looking for trades to get into, because I do want to trade this morning, after the long weekend. So after that, I'll be doing some teachings. Some of it is going to be foundational, and others are going to be a bit deeper. So bear with me. If you want to know how to get into Forex, definitely, send me a private message. If you know me, give me a call. Otherwise, get in touch with whoever directed you to this stream this morning, and they would show you where to go. Well, they'll point you to me, maybe. So let's look at this. I mean, like I did say, we've just gone through the harmonic patterns. Obviously, that tells you I do trade price action. Some people will see my chart and see Ichimoku and moving averages. They say, "Ooh, Francis does not trade price action. He only uses indicators." Now, guess what, guys? If you can do well in Forex using indicators, why not? Don't let anybody talk you out of what brings in the dough. Once upon a time, I used to, I started off learning to trade Forex using indicators. But then, listen to this. I heard God say to me, price action, learn price action. Now, I have no apologies, guys. I'm a Christian, I'm a believer. I'm a servant of the living God. So when I say I heard God say to me, I'm not embarrassed about that, because yes, I do speak with God. I heard God say to me in the spirit, learn price action. That was when I began to take price action seriously. Now, for those of you who don't know what price action is, let me show you. You can see this chart here now, so busy. Let me take everything off, or almost everything, and you'll see a naked chart. Now, we call this the Ichimoku. We call all these lines moving averages. This magenta ball and white ball, it's my own custom indicator, which I created for myself and my members. So let's take all these things off. And we will be left with just the candles. That is the naked chart. Okay, so you can see I've taken everything off now. We just have the candles. We call these candles, the blue and the green, well, candle-like things here. We call them candles. When your chart, this is a chart, not a graph. When your chart is plain like this, we call it a naked chart. And that is basically what I would encourage everybody to trade. Learn how to trade price action using the naked chart without indicators, but obviously indicators also help if you know how to trade them. I personally know and I'm proficient with using 6 different indicators. So when you see my chart looking all busy, some people say, oh, how can you see the candlesticks, the price action with all those busy chart? Well, I still can. I mean, if your eyes are trained to do this, then it's something you can do easily. So, okay. So looking at this now, let's go to the higher time frame. Okay, where we see that the price has been bullish. It's been trending up. The market has been trending up on CHF JPY. There was this pullback. And is it going to be going back up? Let's pull out some of our tools here. Okay, good, nice one. So we basically see using the Fibonacci, the price, pull back to the golden zone, which is, for me, the golden zone is between the area between the 50 and 61.8. We call the 61.8, percent retracement, the golden ratio. But I take it a step further and create a zone, between the 50 and the 61.8. Now, the 50, typically, maybe technically is not a Fibonacci number, but it is used a lot by traders, and it does, price respect it somehow. So we see the market pull back to the golden zone here, and it's pushed back up. I'm going to be looking to see if it's a trade we can get into. I'm just going through various pairs for now and deciding what is what. Okay, so that's the monthly time frame. This is a new month, so we see that there was a bearish candle last month. Does it mean that the price is going to reverse now? We would find out. I usually don't jump into trades. Most of the time, I wouldn't just jump into trades unless the candle has closed. This is the daily time frame, which basically means every candlestick you find here took 1 day to form on the chart. If we go to the 1 hour time frame, it means every candle took 1 hour to form. So this big candle was the last candle. This is the current candle. The last candle here, as big as it is, took 1 hour to form. And the next one is now forming. Well, it's about 8:59 now, which means this candle is going to be closing soon. Isn't it ridiculous? After this big move over the last 1 hour, this small candle has taken 1 hour to form. Very small candle indeed. It hardly moved. So price hardly moved on this pair in the last 1 hour. So what tends to happen is when this candle closes, the next one will open. So let's just stay here, guys, for the next 1 minute or less, and you will see the next candle form. As a matter of fact, let's go to the 1 minute time frame. Okay, you can see it's 9 o'clock now, UK time. This candle has just opened. This is the 1 minute time frame. Every candle would take 1 minute to form here. Bear with me, guys. I know this is basic, but guess what? A lot of Forex traders out there are losing money today because they did not take time to learn the basics. They just heard somebody say you can make money as a Forex trader. They plunged in headlong and started losing money because they didn't learn the proper way. I would say the best way to learn is to get a mentor. You can be on YouTube for many years, learning from every single trader out there, whether they call themselves mentors or coaches or trainers, and still not be profitable. It's very possible because you have people who have different trading strategies and ideologies teaching you, and you end up going away with a mishmash of knowledge and information. And guess what? That is exactly what you're going to take into the market, and you lose money. But hey, let's find some trades. We will be doing more teaching later on. We'll be doing more teaching later on. We'll be doing more teaching. So what I'm going to do now is to find some targets and structure to see where we can possibly get in this trade. Where or if we can get in the trade right about now. You know what? I'm going to let's make this smaller. Okay. All right, I'm going to play some music in the background while I do some analysis here. You know, but we will continue over on Telegram. So join me on Telegram, guys. If you are not part of our Telegram channel, you want to join because that's where I do most of the trading. I mean, we have our free YouTube stream on Tuesdays, but I do a lot of the mentoring on, well, some of the mentoring as it were on Telegram. So if you want more updates, it's going to be on Telegram. So you can see I've marked up here now. You know, price will be targeting here at some point. Let's do this. So you can see even with all the indicators, I am still making note, you know, I'm marking up areas of interest, key levels, you know, structure as it were, or swing highs and swing lows, which obviously is price action. So I've marked that up now. I'm basically going to wait to see what happens. Now, guys, if you're here, you know, I'm at least, you know, I did, you know, do some teaching a while ago for, you know, those who are at the foundation level. Now, obviously, for those who are at intermediate level, I would say, guys, the best areas to get into trades is roundabout, you know, is at key levels, and key levels could include areas of where you'll be having possible breakouts and reversals, you know, and that obviously, you know, would speak of, you know, areas where you have the trend line drawn, areas where you have structure, as in swing highs and swing lows. Those are good areas or points at which to get into the market. Of course, you know, we for those who use indicators, you know, you'll be looking at, you know, moving averages and the various Ichimoku lines. Ichimoku has 5 lines. Those are areas, key areas. So when you see me marking up my chart like this, it's because that is where I'm looking at getting into the market. You don't want to be getting into the market in at certain levels in the market. You don't want to be getting into taking trades, jumping into trades at certain levels in the market when you are in no man's land. You don't want to do that. You don't want to do that. When you don't want to be in no man's land and be held up, with some consolidation or something. Okay, so let's move on to the next. I mean, we would basically just have a cursory view for now, and then we will come back, to them. So I'll play some music in the background, guys. Let's not have some absolute silence. Right, okay. So the best setup so far, guys, seem to be the one we showed earlier on. Okay, so it's pulled back for us now. Right here. So now this was the trade. I took this trade yesterday. And I obviously took it on the copy trade account for myself and our copy traders, and we collected some pips. Basically it went as much as 20 pips or so, and it began to pull back. I basically came out of the trade, took some profit, came out of the trade, and you can see I did well in coming out of the trade because it has since pulled back by 30 pips, which means if I had stayed in the trade, we will be in a drawdown, now. So what's going to happen is I'm going to be looking to get into the trade again, but I'm going to wait for the candle to close. It's about 9:09 now in the UK. I am going to be waiting till about 10 to see what price does. Like I always say, I hardly take impulse entries. Sometimes I do, but I hardly do that. Impulse entries basically is when the candle is still, forming or painting on the chart, and you jump in. I usually wait for the close of the candles, So this is the 4-hour candle. This is the 4-hour candle, which basically means this candle closes in about 15 minutes or so. It could end up closing higher, turning green. It is possible, or it could continue down, remaining red. So that's the 4-hour. If you switch over to the 1-hour, this is basically what it looks like. So the last 3 candles is what makes up that 4-hour candle. So I'm going to be waiting to for the close of this candle in the next 15 minutes to decide what to do. So you can see what was happening. You can see what happened before. Let's go to a naked chart. So you can see this is Euro USD with the indicators on, and this is the same Euro USD, the same time frame without indicators. So what I had done was, got in at the breakout. So there was a breakout there. We can see where the price broke out. I'm not quite sure. Let me see. I'm not quite sure the exact place where I got in. Let me just go back to my history there. Okay, I got in at, I had gotten initially, at 1.18753 or thereabout. So that's where I got in initially. The candle broke here. Candle broke out here. I got in. Obviously, I didn't get in on the 4-hour. I must have, I got in at the break of, a fractal high, and obviously it went up. It's now come back. So I've been looking to get in again. I believe looking at the harmonic pattern that I showed you at the beginning of the stream, the price, it's the downtrend has ended, I believe. It's been in a long-term uptrend, and then we've been having that zigzag going on. And I believe it's going to be going It's going to carry on up. Looking at this area, you can see what's happening here. If you were to zoom out, you'll see this is a key level. The price is currently at a key level here. I'm not going to go too deep, but even if you were to consider this an inverse head and shoulder, then this would be the left shoulder, this would be the head. The price came down to the shoulder level and pushed up. It is still more or less at the shoulder level, which basically means it could carry on up. Otherwise, if it breaks down, that would mean a failed head and shoulder. So that's what's going on here. We need to see what's going to happen with this candle before we get in again. What I always advise is that you don't want to predict the movement, the price movement, because when you predict, it's almost as though you are going in with a predetermined decision. What I say is to basically watch the candle, let the signals come from the candle itself, before you get in. You know, there are times when you have a bullish bias or a negative bias, but believe me, there are times when you want to be neutral until the candle or the price tells you where it wants to go. So that's what's going to happen with this one now. You know, so having broken, broken back into this area, this zone, because if you consider it really, this is a range. If you consider it, this is indeed a range. You know, this area between here, this magenta line at the top and this magenta line, there is a range, a 48 pip range, and price, you know, obviously has been in that area for some time. Let's move this out. So you can see price has been in this range for quite a while. At some point it broke out, it came back in, but here it broke out as well, it's coming back in. I don't necessarily like trading in the range unless, you know, I'm scalping. I mean, being a 48 or 50 pip range, you can definitely scalp for 10 or 15 pips, you know, but I'm not keen on scalping on this pair today. I do want long-term trades, you know, so you can see the price came down here, hit the bottom, went to the top, came to the bottom and broke out, moved to the top, and it's just in this area, this whole area. You know, so I wouldn't want to trade in that range. Okay. So let's all be muted on Zoom. Let's be muted on Zoom, guys. Okay. You know, I do also have, you know, the VIP members on Zoom, you know, for those of you on YouTube. So anyway, let's find some more trades. What I'm going to do now is basically just pull out a whole number of charts because I want to be able to get into some trades this morning. Let's start from the top. That's AUD, USD. Wow. I wonder what's responsible for this big move in euro. Let's just check the euro pairs first. Let's check the euro pairs. Okay, that's not across board, it seems. Okay, it's just a few euro pairs then. Right, yo. All right, we're doing some analysis here. What I'm doing is some multi-time frame analysis. Basically meaning, having a look at a couple of time frames, the daily time frame, all the way down to perhaps the 15. Now this is the Ichimoku cloud, as it is known. As I go over the charts, scanning the charts like this, I'm taking notes of pairs which we're going to be looking to get into, hopefully today or tomorrow. It might not necessarily be this on this stream. I don't want us to come into our YouTube stream thinking we're going to surely get a trade. We don't just jump into trade for the sake of it, or else you lose money. The setup has to be right. For me, before I jump into a trade, it has to be, in my own opinion, a perfect entry or near perfect entry. Some might say there's no such thing as a perfect entry. Fine. A near perfect entry. I won't just jump into trades for the sake of it. But I will be dropping some harmonic patterns, on the Telegram channel, at some point today. So look out for that. The Euro USD and this particular one, Pound USD, otherwise known as the cable, are very good candidates. Possible trades we're going to be getting into in the coming hours or so. I'm also checking for risk to reward even as I do this. What I'm particularly looking for now are day trades. What I'm particularly looking for now are day trades. The medium to long-term trades I would, do later on by posting them on the Telegram group. With our medium to long-term trades, I tend to do those analyses using head and shoulder or harmonic patterns. I'm sure some of you probably see me as a harmonic trader by now, and you'll be right to assume that. Right, yo. Bear with me. Let's take our time and find good setups. Let's do this properly. So hello guys, hello. I know I have viewers from everywhere, but I can see some of you are from Nigeria. Hello guys. Feel free to share this YouTube link. Share the YouTube link for others to join in. Let's learn together and make pips and profits together. Now, what I'm going to be doing towards, we're going to be coming to the end of the YouTube stream, saying about 15, 20 minutes. What I'll do is I'll let you know where I'll be looking to get back into some trades that I have come out of, or where I'll be looking to get into some trades. When I'm using harmonic patterns, obviously there are specific things I'm looking for. I don't really want to spend too much time teaching on how to use indicators on the stream. I rather teach price action, because that is basically, I suppose, if anything, a good place to start. What I now do with my students and mentees is I start them off with price action as opposed to indicators, so that indicators now become just an aid, not the main thing. I want to be able to train, I want my guys to be able to, have their eyes trained to see certain patterns on the charts. The price has really moved on a lot of these pairs, and when price moves like that, when price has moved, what you want to wait for really is a pullback. So we're going to be waiting for pullbacks on a lot of these pairs, as I can see here. That tends to happen when we have a long weekend with bank holiday and all that. When the market finally opens, it's like all those who were itching to jump into trades just jump on in and push the market in a crazy way. Well, we know the big boys as well, not just retail traders. By big boys, I'm referring to banks and other large institutions. Oh yes, oh yes. Just in case you didn't know, guys, it's not just you and I who trade in the market. We are the retail traders, but we do have the big boys, the banks trading with us. I mean, see what I'm saying, guys? Take for example, you can see these last 1, 2, 3, 4 candles have been pushing in this direction. This is the 15-minute time frame. It's been pushing powerfully. That says it all. in the last 15 minutes, sorry, that would be 1 hour. Let's go to the 1 hour time frame. Okay, well, in the last 2 hours, the selling pressure has been intense, been heavy. So you don't want to be jumping in with such, setups. If you go to the 15-minute time frame, you can see perhaps better, in the sense that the last many candles have been pushing in one direction. You want it to pull back. For instance, this one, if you're going to trade price action, if having checked the daily time frame, you believe the move is to the downside, maybe you check the 4 hour and all that, the 1 hour, and you're looking to get in, you want it to pull back close to the last drop, the last swing low. So on the 15-minute, for instance, that's where I would most likely get in. I would want the price to pull back to here at least. Pull back to here, or maybe even here. Let's zoom in. Okay, yeah, you'll want the price to pull back close to this area, or even that area, before you continue to sell. I mean, if you jump in now, yes, the price can keep on going down. If you decide to wait, it might not you might miss the train. But hey, guys, that's the way it is in market. Now, but looking at this now, though, going back to the daily, I might as well just do some teaching here. Get used to drawing trend lines as traders. You could decide to pull up your trend line here. Just in case the price decides to go back, that's how far it might possibly go before it continues down. Otherwise, if it breaks here, if it breaks this area, if it breaks this low, it could continue down, for another 50 pips, 100 pips or so. So trading break of structure is one of the ways to trade. There are other things you look out for, but trading the break of structure, swing highs and swing lows or key levels, it's a good way to trade. Otherwise, you could let it pull back to the trend line. This is the daily. If you're going to be doing that on the daily, it means perhaps you are a swing trader. But I thought I'll quickly, drop that. So I won't jump in this trade now. I'll wait for a pullback. Let's check a few more. Okay, I think I kind of like this one for a buy as well. But let's do some more analysis. Yeah, I mean, I won't be jumping into any trade, guys. I am going to be waiting for some hours, the close of the current candles at 10 o'clock UK time before deciding what to do with some of these pairs. Right, yo. So we're going to be coming off Zoom in the next 5 minutes or so. And I'll be continuing with, the guys over on Zoom. You see, anytime you spend with me on Zoom, it's never wasted, even if you don't find any trades. That's why I do endeavor to drop some trading nuggets. So definitely you go away with something. But hey, join us on Telegram, guys. Where I give, some level of mentorship. But definitely if you want full mentorship, then you need to become a VIP member. Right. There are a couple of harmonic patterns I'm going to be dropping today. I'll be dropping them on the Telegram channel. And I'm referring to harmonic patterns that we'll be looking to get hundreds of pips from. I mean, I just showed you some a while ago. I just showed you some at the beginning. Now, if you're watching this, obviously on YouTube, if you're watching the replay of this, I would say to definitely, go watch from the beginning, because I went through some things which you definitely did miss, and you don't want to, miss those things. So you definitely want to watch from the beginning on the YouTube, and definitely give me a like. Give me a like. Strike the like button, guys. And subscribe to our YouTube channel if you're not already subscribed. Yeah, I mean, the market has moved powerfully this morning. I'll be waiting for pullbacks. One thing about pullbacks, guys, one thing about waiting for the price to pull back, for you to get in, is that it usually confirms that a trend is at play. Oh my goodness, I give you that for free. Pullbacks are usually confirmation that a trend is at play, either an uptrend or a downtrend. Now, a pullback is different from a reversal. If the price is in an uptrend, for instance, and it pulls back, it basically means it's a slight, retracement before it continues in its initial direction. That's what a pullback is. Now, when we talk of a reversal, on the other hand, when we talk of a reversal, it basically means that the price is changing direction. The trend is changing. Let me just quickly give you an example and we will close with this. Let's use a naked chart. Let's look for a naked chart. Let's look for a naked chart. Okay, you can see what, before we do that, you can see what I was looking at earlier on the DAX. I love to trade the DAX and the Dow, and of course gold. You see, in the last hour, the price came this low. I did say to wait for a pullback, and that's what we are getting here now. It's going to be a possible sell. I mean, I'll do further analysis later on and let you know in the Telegram channel if I am going to be selling or when I am getting in the trade. So you can see this green candle. This is the one, this current hour in the last 42 minutes is pulled back from here where it was when we saw it. It's now here. So that's a good thing. Anyway, let's quickly look at this one. Let's use this as an example. Let's use this as an example. Let's use a regular currency pair. Okay, let's use Euro USD. Let's use Euro USD. Let's go to the daily time frame. Let's go. We'll finish with this, guys. Okay, so see what's going on here, or see what happened in the past. The price was here. The price was here. So you can say this was the low. You can say this was the low around about this area. From here, the price began to do a zigzag all the way up like it does. Price never moves in one straight line. Price never moves in one straight line. Instead, it will zigzag all the way up or zigzag all the way down. So when we zoom out, this is what we see. At least I've marked this area and this blue rectangle so you know where we are at. If we then zoom in, you see it was zigzagging, zigzag, 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 all the way up. It kept on going. It came down here, played around here, kept on going, and then it reversed. So let's also now zoom out again. Now doing that, we see the price went all the way up here. It corrected, this was a deeper correction than all the other previous correction. Some might not want to use the word correction unless it is deep. Well, let's not get pedantic here. When the price pulls back or when it retraces, I'm tempted to go deeper, but we only have about a few minutes just left. When it comes to retracement, pullback, reversal, correction, all those are terms that could mean the same thing, but there are little differences. But anyway, the price went all the way there, a deeper correction went all the way up, and guess what? Ever since it created a high, here. So there was a low here, what you might call the floor, and the high, what you might call the ceiling, and this is a reversal. it's not just a correction. Price was going up, it pulled back a bit, correcting and continued on its initial journey or direction. But when it got here, it wasn't going to go further. It reversed. It wasn't just a correction now, it was a reversal. So what I am saying here is basically the best time to get into a trade is when it has pulled back for you. So looking at this, when the price left this low, when it left the bottom here, initially it went up. Let's pull out the my pen. So when price first went up, it came down, it went up again, down. You see, the best time to get in is when it's pulled back and it begins to go back up. So let's erase this. So what I would tend to do, guys, is, for instance, when I'm convinced it's bottomed, because if you consider this, I am doing some good teaching today, aren't I? If you think I'm doing some good teaching, give me a like. That's how to reward me. Now, we see here the price came down. It wasn't going to go lower, which basically means it had bottomed. Now, when it bottoms, what happens? The only way is up. It began to make its way up. It began to make its way up. Pull back here. Oops. Each time it pulls back and it's going to continue, you want to mark that area. So let's do this now, guys. Let's just mark the different points at which it reversed. It pulled up, came down, was going to continue. It continued, pulled back, was going to continue. We will mark there. Pull back, came down here, we mark here. Pull back, came down here, we mark here, and it continued. So these are the best areas to get in. Even if you do not catch the price, continuation, at the very beginning, at least you will capture some pips. So let's make this bigger. So when it pulled back here, for instance, and it began to go up, even if you didn't get in at this candle or that candle or so, perhaps you would have got in here at the break of this high and continue. So on and so forth. Hey, we gotta go. I'll tell you guys, join us again next week, Tuesday, because we, stream live on YouTube on Tuesdays. It's our streaming Tuesdays. That would help you remember our streaming Tuesdays. So join us again next week. One of the ways you would know, obviously, is if you receive the link, the YouTube link from somebody, or perhaps you see it in our Telegram group. Join the Telegram, and I'm sure you will love it. Feel free to send me any questions. Let me see if there are any comments or questions anyway. Feel free to join me. Hello, good morning. Whoa, lots of guys. I can see, it's only the Nigerian guys that seem to be bold enough to post that they are viewing from Nigeria. I'm sure I have I know I have some international, international audience. So hello to Osas, hello to Abo Larry, hello to A+ Concepts, and of course, Ejiri. So join us again next week and let's do this together. But if you want to enjoy more nuggets and tips of trading, some level of mentorship, you definitely want to join our Telegram channel, and I'll be dropping some signals there today for us to get into. So I'm now going to continue with my guys on Zoom. Catch you over in YouTube land next time. God bless.